let's talk a little bit about what we're seeing in the Bitcoin chart. There's not a lot of price action in Bitcoin. Bitcoin continues to kind of just consolidate. So far, it's doing okay on the economic news today. In general, it's actually holding its gains. 2 days of pullback, one up day here. What is that creating? It's creating the pattern. I went over patterns yesterday, right? So again, you're creating what we would refer to as a bullish pattern of consolidation. It's not the right angle. We talked about this yesterday. Right angle, this is the perfect bull flag, 90-degree angle. It's more of a up and then a slight decline, right? Up, slight decline. That's still a very good pattern as of now. So again, if you're just looking at the pattern, this is still a positive chart as long as the angle doesn't get too steep. Remember, the steeper the angle, the lower the probability of it playing out. So you want something as close to 90 degrees as possible. Once it gets below 45 degrees, like if you get a chart like this, I don't like that anymore. And I'll tell you why. You want to know? A little secret here that I divulge in my Winning Trader series is that when you get a reversal of this magnitude, you know what you end up getting? A lot of times something like this. Now, what is that? What is that? If you think about it, look at this. Now, what type of pattern is that? Bear flag, right? So when you get too steep of a reversal and you get the bounce off that reversal, even though it's trending back up, it's actually starting to create a bearish consolidation pattern, which then gives you the probability of a down move, not an up move. That's why the angles are so important. And this, again, this is like $1 million concept right here to understand so you can read these pattern formations clearly. All right, let's go to gold's chart real quick here, guys. Gold is trading lower here. I'm actually kind of rooting for gold to go down a little bit more here. The reason is because you have a very crisp trend line right here to right here. This is a retrace to the scene of the crime. So again, we're getting close to the 2000 level. I would say around 985 is your buyable level. It's a retrace to the scene of the crime. And even if it goes back below there, you have this trend line, upsloping line right there as well. So there's so much support in here that I think that's your buyable level. So again, 1985 to 1950, we'll call it. Anywhere in there, gold becomes a buy again on a pullback. Speaking of buys, silver has finally achieved the levels that I wanted to as well. In fact, it's piercing the levels. Take a look at this, guys. So again, remember this channel. Beautiful channel. Well, look at this. Look at the reversal back down. We're actually below that level. I actually like silver here. And again, granted, it's just for a bounce. It's just for a bounce. But the idea is, yes, you're below this level. That's okay. Why? Because you have all this sideways consolidation support right in here, right? All this sideways there stuff as well. So again, that's one thing to watch on the silver chart. Now, one more thing on the silver chart is that even if it continues to come down, take a look at this. What do we have as our next support, right? And this, you could even be patient and try to wait for it, but just simply take the low here to the low here, and if silver comes into this area, that's even more support, plus all this sideways chop here is right at that same level. So essentially what I'm saying to you is right now we're at $23.30 on silver. Silver to me is a buy here, slow accumulation, all the way down to about $22.75. Anywhere in that range, to me, looks like a bounceable level on that.
Hey, in Crypto Street, and we're strapped in for another wild ride in the crypto roller coaster. Smash that subscribe button if you're ready for the thrill, and let's dive into the heart-pounding action. Hold on to your moon helmets, folks. The SEC is in the final lap of talks about Bitcoin ETFs, and the excitement is through the roof. Grayscale, BlackRock, Invesco, and Erica Investments are in the ring, waiting for the SEC's verdict. After that August court drama, the SEC's all in, discussing custody, creation mechanisms, and risk disclosures. If this ETF gets the green light, we're talking about a potential demand surge of $3 billion. Buckle up, because the crypto world might be on the verge of a game-changing moment. Bitcoin, the OG roller coaster of crypto, is at it again. Prices surged, dropped, and now we're in a suspenseful limbo between $43,200 and $43,600. But wait, Ethereum and Solana are stealing the spotlight, hitting new heights at $2,382 and $71.96. Sentiment sounding alarms about a possible bull trap, and the drama's real. Is Bitcoin gearing up for a comeback, or are we in for a plot twist? Behind the scenes, crypto wizards are decoding the trader tactics. Bitcoin's recent rally is sending shockwaves, but it's not a straightforward joyride. Market makers are questioning the market's strength, with projections at $37,500 and $38,500 in November. Pro traders are playing it smart, avoiding leveraged longs in this crypto storm. Futures are on fire, but not everyone's buying the hype. Some big shots are reducing their long-to-short leverage ratio, signaling a profit-taking move. The real question, are we in for a bullish blast, or is this a calm before the storm? And that's a wrap for today's crypto roller coaster. Will this SEC drop the ETF bomb? Is Bitcoin cooking up a surprise? How are the traders playing their cards? Now let's continue our enlightening discussion with Gareth Soloway.
Now, this is the jobs data, guys. So we're going to cover the jobs data. I want you guys to make sure you understand where the numbers came out. Then we're going to take a look at the beautiful market reaction. And this was a wild reaction, to be honest. It's a reaction that is kind of perplexing, but I'll explain it through. All right, so non-farm payrolls reported literally 20 minutes ago, right? 20 minutes ago, we got the non-farm payrolls. Well, actually about 30 minutes. Last month, 150,000. Forecast was 180,000. We got 199. So that was a higher number than expected. And remember, in general, the markets want slightly weaker than expected, because when it's stronger, it means the Fed may not have to cut rates as quickly. And one thing I want to say, folks, and again, I got riled up yesterday, and you guys know that, and it seemed like you guys enjoyed it, so we'll see what happens today. But the kicker is this. The market ahead of this number, as of yesterday, was pricing in 130 basis point rate cuts in 2024. 130 basis points, all right? That is massive. And the markets have been rallying on that, like, oh, free money, low money. But if you think about it like this, and this is such a simple concept, that if the Fed has to cut that much, where the hell is the economy? Because if the Fed is cutting that much, the economy is in the toilet. And again, right now markets are like, all we see is rate cuts and that makes us happy. But you have to connect the dots. And right now the markets are not connecting the dots. They're waiting and seeing what else is going on and looking towards those free money kind of rate cut situations. Okay, so back to the numbers. Unemployment rate last was 3.9%. This time expectations 3.3%. Actual was 3.7%. So this is again a kicker here. We're getting a lower unemployment rate. That means more people have jobs. This is not the type of data that the Fed is going to look at and say, oh my goodness, this is great. The economy's slightly weakening. We're going to be able to cut rates, or we're going to be able to stop raising rates. This is the opposite. This is stronger data, right? This is a stronger number. So first one was stronger. Second one was stronger on the economic front. And last one, the last big one, was average hourly earnings. And what we see here, last was 0.2%. Today was forecast at 0.3. It came in at 0.4. Another stronger data point. All right, so basically everything today, folks, came out stronger than expected. Now, what's really interesting about this, and I want to just divulge a little bit of my thought process on this, more people having jobs is not necessarily a good signal. To me, what's going on here, and I was just discussing this with the traders in the trading room, is that more people are like, holy cow, I have to get another job. I have to do more things. I can't afford to not have a job because everything costs so freaking much. Think about this. You know, you're making $25 an hour, which is actually a reasonably decent wage, and you're just renting. You know, you have a small family and you're renting. Over 50% of your rent or your income is going to rent. All right, that's not including food, energy, electricity, internet, you name it, all of these other things. And so to be honest, yes, things are staying strong, but I do believe the undertones in the economy are cracking more and more. Now, again, the crucial factor here is going to be, can the Fed still lower rates, or are these things going to kind of help inflation stay elevated? And that's the bigger question.
El Salvador has unveiled a new citizenship investment program, the Freedom Visa, open to a limited number of applicants. By investing $1 million in Bitcoin or Tether, participants can secure Salvadoran citizenship. A U.S. senator says Congress needs to regulate the crypto industry with a light touch that doesn't kill innovation in the U.S., noting that crypto has the potential to disrupt much of the traditional banking model. He stressed that crypto regulation needs to be appropriate to avoid driving companies offshore. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.